Happy Tuesday, everybody. Today is May 11th, 2021. And before I even get started, I want to wish a big happy birthday to my father. I've been blessed enough to be working with him since 1998. And what he's taught me in the office and out of the office, I can't thank him enough. So I just want to wish him a big happy birthday. Happy birthday, Dad. Many happy returns of the day. Welcome to the Tuesday market update video. As always, we'll review last week's market and we're going to plan for what we'll be watching this week. As seems to always be the case, there's a lot to cover, so let's jump right in. We ended the week with a bang, but let's not read the last chapter of the book before we get the first one. So I don't want to ruin the story. So let's start with Monday. Monday started a little quiet after a weekend of good vaccine production news. So we did have some disappointing ISM manufacturing report news, but the key was that Jay Powell continued his consistent dovishness, and the S&P was up about 0.25%. Tuesday was a bit more choppy. We saw Treasury Secretary Janet Yellen, formerly Fed chair, I might remind you, say that interest rates would likely have to rise if we wanted to keep the economy from overheating. Now, we all know this. No one wants to talk about it. It's the big elephant in the room that no one wants to talk about. Rates are going to have to go up. As long as it doesn't happen anytime soon, everyone's happy. So it sounds like a lot like the people who know that we need a new recycling plant, but as long as they don't build it in our backyard, they're fine with it, right? So the market did not like that topic at all. The S&P closed down just under 0.75% for the day. As you may have expected, Wednesday, Yellen walked back her comments on everything that she said on Tuesday. You always have to wonder at that point, was this just a trial balloon that the Federal Reserve and the Treasury Department are out there trying to see how these markets are going to respond? So they got the answer. So we did get another soft ISM report. S&P 500 closed pretty much flat for the day. Thursday brought on some positioning ahead of Friday's April jobs report. So that came on Friday. We did set weekly lows. Then we recovered to test highs just under 1% for the day. That brings us to Friday, the big bang that I spoke about. So before the open, the expectation for 1 million new jobs was blown out of the water by the report coming in at 266,000 new jobs, almost a quarter of what was expected. And March was adjusted down by another 150,000 jobs. All in all, if you were hoping to celebrate the U.S. reopening and all these new jobs, you were very disappointed. The numbers were so far off. There's a lot that's being said about that. We'll have to live with those numbers for another month. But remember, our high frequency numbers start to come out. They come out every Thursday, the jobless numbers, and we'll see what those look like. We're going to talk about that more in a moment. Just to wrap up the week, the market reacted to the huge miss by rallying and closed up almost 0.75%. Tech stocks even better than that. So the big question, does the major reporting miss change the market outlook? Does it change what's going to look like going forward? And the short answer to that is no. It does change some of the narrative, or at least it may change some of the narrative. This may bring about some government spending, bring it even more so into focus to support this economy. It also is probably going to push out the tax talk, the increases in taxes down the line. So we'll see how that goes also. Remember, these numbers are volatile. We really have to think about how this number could be so off. I mean, how could it really have happened? I have to believe that all of the reopening is going to bring about it's going to be accompanied by new jobs. So watch out for some higher June numbers and even maybe some revisions to these May numbers. So that will cause some rearview mirror actions to come about. So sometime next month, we'll have to see how that goes. We do continue to see inflationary numbers in the reports, but we keep hearing that this will be short-lived. So there really has been no evidence either way on that. So with the market right now being a half full market, everything looks good. We're going to see how this goes, and we'll keep grinding higher. We are hearing comments from the administration, the Commerce Secretary to be exact, that we do not have evidence that the enhanced unemployment benefits are keeping people home, since they can make more money working at home, not working, than they can actually going to work. We did see Minneapolis Fed President Neel Kashkari. He told the Sunday shows that there is some truth to the idea that we're creating a disincentive to return to work. So we'll see how this part plays out. I'll be watching it closely with you as as this is exactly where the Federal Reserve is watching. They're watching the labor markets, they're watching employment. I can also say that speaking to many of you that own businesses, we are having a hard time finding people to come to work. So let's talk about this week. What are we going to see? Normally post-jobs week, we have a pretty quiet week, but that's not the case this week. Wednesday's the big day as we'll get the CPI report. As I mentioned last week, we're about to start getting some huge numbers. It's pretty amazing numbers in both directions. So last week I told you about the Atlanta Fed came out and did estimates that second quarter GDP 13+% growth. We know it's coming, but it'll still wow us when it comes. That's the danger we have when we look at the CPI numbers as well as the PPI numbers. We know the comparisons are going to be pretty crazy, but still, when we see year-over-year jumps that are expected to show 3.6% on the CPI, or the PPI that's expected to jump 5.8%, it's going to shake some people up. Remember, we're really watching for inflation, so we're going to have to continue to see how this goes, and the market's going to continue to have to believe that these moves are transient. Retail sales numbers come out again on Friday. Remember, last month this was a positive surprise. They're expecting 1% growth this month. As I mentioned, we have weekly jobless claims on Thursday. Today we're going to see JOLTS, job openings and labor turnover report, and we'll see how that lines up with Friday's reports. Overall, it's another pretty big week for the economy and the markets as we are exiting this pandemic. As long as the markets don't think that we're going to roll over again, and there's no evidence of that, and do not begin to think that the inflation is something other than temporary, then the economic data that we're getting right now will support the market's move at this level. So let me touch on the fact quickly that commodity prices continue to move up. That's copper, that's gold, that's oil. They all continue to move up. So we're going to be watching that as well. Keep in mind that we're going to keep an eye on the dollar and the 10-year yield. Remember, with the new volatility that's going on in the 10-year even, the 10-year has been contained over the last couple of months since February. And so as long as it stays contained, we'll be fine. But if it moves one direction or the other, we're going to see increased volatility. For now, that's all we've got. Have a great week. We'll look forward to seeing you Friday on our planning video. And don't forget, if you talk to my father, wish him a happy birthday.